Folks, it's Jeremy from Trading Safely. Just going to do a little piece on the Dow Jones for everyone's benefit. I work with Sean Downey, Technical Analysis Book of the Year 2014. He's been in markets for over 37 years, trading everything and anything that moves. He's been a mentor and long-term trader. Myself, I've been in markets for 15 years. I worked for Optiva Australia, which is a proprietary trading company, for over 7 years, making in excess of $120 million trading. I just wanted to share a little outlook on the Dow and put things in perspective from both a short-term perspective and a long-term perspective, and then really at the same time try and draw down on a few of the analytical tools that we use at Trading Safely. And if you do want to get involved, don't forget www.tradingsafely.com.au. We do service all levels of traders, from professionals. We've got clients at major banks, major trading houses, all the way down to beginners. So please feel free to get involved if you want. Our website's got everything you need to know to get involved. We've got an online private group on Facebook where we cover global markets 24/7 with forecasts and major levels and our interpretations of what markets are doing. And really we're going to just touch on that now and give you a bit of a sample of what it is that you might see. And just to do that, I might just start with one of our I'll build up some of the analytics for the people that have never seen this before, and we're going to start with range deviation pivots. Now these pivots give us 3 standard deviations up and 3 standard deviations down, and they're based around the opening price. So at the start of each period, whether it be day, week, month, quarter, semi-annual or year, we're able to calculate based around the opening price, where price can move to across each time frame. And typically what we see when we zoom in to these pivots is that here's our opening price. Oh, let me just switch that over. Here's our opening price in gold. Then we have the first pivot up, second pivot up, third pivot up, and then 3 down as well. 1, 2, 3. Now, it's quite simple. The logic is like this. Where you close each time frame above the first pivot or the upper pivot, then the market wants to go up. So that would mean in here, if we closed above that upper first pivot there, then the market would likely want to go up in that time frame, right? And if the market closed below this first one down, then the market would likely want to go down. And if we close in the middle at the end of the time frame, then the market wants to consolidate. So this is a 7-20-minute chart of the Dow Cash, DJIA. And we look at this high here. At that point there, the market closed below the first down lower pivot. And if we look at the move down here, we had a sign of a reversal here. Okay, so that was the first time the market moved over the lower pivot. But at times, these relationships can hold for a very, 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 very long time. For instance, if we look at this low here, okay, so the market closed below the first down pivot there. And then at this point here, the market closed above the upper first pivot, which was that little one there. Now, look how far the market moved before it closed below the lower pivot. So the lower pivot is this purple one. So at the end of each period, these are 7-20 minutes, you can see just how far the market moved before it closed down below the first. In fact, that was the candle there. So really we had from this bar here up to this bar here. where the market moved up without closing below the first down lower pivot. So this is where it gets interesting, guys, because this can happen in every time period markets are fractal. So if I remove this now, and now I add in the first pivot from each time frame. Okay, so now we have these little green lines. They're the daily first up and first down pivots. We have the weekly, which is the yellow. So upper pivot, lower pivot. We have the monthly, upper pivot, lower pivot. And we have the quarterly, upper pivot, lower pivot. And semi-annual, upper pivot, lower pivot. Now these pivots are non-linear. They're a function of volatility. They contract when volatility contracts. They expand when volatility is higher. In a downtrend, when volatility is up, the lower bearish pivots will expand to the downside while the top ones contract. And in an uptrend where the market's moving up in an explosive fashion, the upper bullish pivots across time will open up more relative to the lower pivots, so that the so that you can move in and out of the trend more freely. But underlying these pivots is a story and an ability to move through time using these pivots, because to be able to move through time, one needs to be able to effectively use different time frame levels as a basis for deciding on whether the trend is evolving from one time frame to the next. So maybe if I go back to like a major low, so the 2000, you go a long way back, say the 2007 low or 2009 low, even that was a pretty big one. And let's just have a look at what happened. So just to re-emphasize a couple of points, the trend is driven by where we close at each time frame. So are we closing the end of the week above the upper pivot like here? Well, that would be a bullish at the week level. Are we closing above the monthly time frame upper bullish there like we did here? So that would be a monthly buy signal. Are we closing above the quarterly pivot? That brown one there like we did here? Well, that would be a quarterly buy signal. So this is how we can develop a system to move through time by using multiple time frame analysis and being able to identify when a market is overbought or oversold. So typically when we have an equilibrium in markets across time, all of the bullish and bearish levels will be contained within each other. I'm just trying to find an example of that. Probably here's not a bad example here, where we have the daily green pivots inside the yellow pivots, the weekly, and the weekly inside the monthly, and the monthly pink pivots inside the quarterly. Now that's considered a stable market, and the reality is that could expand out to semi-annual and annual pivots as well. So that's one dynamic. What is the relationship of these bullish and bearish levels in each time frame relative to each other? And secondly, where are we closing? Are we closing above, in the middle, or below each bullish and bearish level in each time frame? By doing this, we can work out A, when the market is extremely overextended, and B, what the trend is and how many time frames are trending. So if I look to the 2009 low, we got to this point here where at the final low we had both monthly pivots outside of the two quarterly pivots. Okay, now that could be replicated on any time frame. It could have been the two quarterly pivots are outside the two yearly pivots. But in this instance, the shorter term two monthly pivots were both below the lower quarterly pivot. So this is an example of where a market is extremely oversold. Now, for that market to continue to sell further, will continue to go down further, it needs to close below the lower bearish pivot at the end of that time frame. And where it doesn't do that and it turns around and takes out the upper bullish pivot, then you know that you may have a serious change of trend on your hands. Just bear with me, folks, because the computer's thinking for some reason. But if I look to this major low in 2009, the first thing that stands out is, first of all, these two pink bullish and bearish monthly levels are way outside the two bullish and bearish quarterly levels. And I note that if I just go back to the December, we had the same setup. But look at the difference. The difference there is that at the end of the month, we did not close above that upper monthly bullish level. Whereas at the low here, both the monthly bullish and bearish levels were outside the quarterly, and we also closed above the upper bullish level. So at that point there, at the end of March 2009, we had a monthly trend on our hands for the Dow, having hit an overextended low. Now, as we evolve through time, it's possible to switch time frames as the trend extends. And so, if we look now to the next month, the market was still strong and we managed to trade above the upper bullish pivot at the end of April. That's another bullish sign. And once again here, we had another close above this upper bullish at the end of May. So we had three bullish closes in a row. It doesn't really get much more bullish than that. That's quite rare. And the thing is that the higher that the market goes in the short term, or to get a long, effectively what I'm trying to say is to get a long-term buy signal, the market has to become overbought in the short term. So remembering that a market is neutral when the pivots are inside each other like this. So we have the two pink pivots inside the quarterly pivots. That is a neutral situation. However, where you get this scenario happening where the upper pivot or the upper monthly pink pivot moves above the quarterly pivot, then you must have a monthly close for that market to keep going. Okay, so at the end of this quarter, we closed up here. We had a quarterly buy signal. So at this point here, we go from being a monthly trend with a monthly stop loss. So our stop losses are these pink levels, the low ones at the end of each month. So when we move to a quarterly buy signal by closing above this brown level, the upper one, the upper bullish quarterly level, we turn into a quarterly trend. And then we have our quarterly stop down here. Okay, so now all we need to do is follow the quarterly levels to see how long we can remain in the trend. And what you'll find with the Dow is that this lasts for a very, 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 very long time. And in fact, as the trend evolves, we're able to swap from time frame to time frame. So what was once a quarterly trend becomes a semi-annual trend. And the semi-annual trend can become an annual trend. Even in this pullback here, we managed to, let me just have a look. It's a little bit hard to see here, but okay, so there we had the close of the quarterly trend at that level. However, that's fine. At the quarterly level, that trend was over. But the very next quarter, the monthly trend reinitiated by closing above this upper monthly bullish level. And so once again, then your stop is the lower bearish level at the end of the following month. And really this process goes on where you zoom in and zoom out of time frames whilst the trend evolves. Okay, so at this point here, we did not get stopped. At the end of this quarter here, we closed up here, so all of a sudden we're back onto a quarterly trend in the Dow again. And then our stop is the lower quarterly pivot in the next time frame, which is right here. Okay, and so once again up here we have another quarterly buy signal because we closed above this upper quarterly bullish, and we just move through time, waiting for the market to tell us that the trend is over. So once again here at this point right there, you had a quarterly close. I told you that the market was the quarterly trend was over, and you were looking for, sorry, right here. At that point there, once again, you need another reason to get back in at the shorter time frame. Here it is there. We had the monthly buy signal once again, courtesy of closing over this monthly level. And then we use that monthly stop there, so we managed to stay in the market there at the end of the month. And then again, sorry folks, the computer's incredibly slow tonight. And then again here, we closed bullish, and we failed to get stopped out by this bearish monthly level. That was also a bullish quarterly close, so once again we could use the lower quarterly as the stop loss going forward, which is here. And then here as well, right there. And then looking forward, it looks like there's a few quarters where there's absolutely no need to sorry folks, not sure what's going on with the internet tonight. It's awfully slow. But if we just look at the lower brown levels, we're on a quarterly trend. We're not closing below any of them. So here, still haven't closed below that, the quarterly bearish. Now this process just evolves through time. Now these blue lines have appeared, which are semi-annual levels. And we notice that that point there, that was actually a bullish quarterly close, so another reason to be buying. And then more recently, if we could just zoom in again. Okay, start of this year, there's upper quarterly bullish. There's another reason to be getting long because we closed over that upper bullish there, and the stop was here. Again, last quarter we closed above this brown area, this brown quarterly bullish level. And the stop right now if you've been trading this market for a long time, is a quarterly close under 19,750. So right now, the market has evolved from a monthly trend in 2009 right through to a semi-annual and even annual trend. If you have a further look back period for the Dow, it's actually an annual trend as well. So the bottom line is that there's the Dow is in a monthly, quarterly, semi-annual uptrend. There's absolutely no reason other than the weekly time frame to be short the Dow. And the next target at the quarterly level is 21,300. That's the next bullish quarterly level. So a quarterly close over 21,300 will keep the trend alive and well come the end of June. Similarly, if the Dow Jones cash closes above 20,846 at the end of June, then the semi-annual trend is alive and well. Now, what's interesting is to also have a look at sort of some longer-term targets for the Dow. All I read about is bearishness for the Dow, but from what I can tell, it's hard to see that bearishness, and I'm not sure. I think it's ill-founded. So what I want to do here is just come back and have a look at some of the price targets on a long-term basis for the Dow Jones. So what I've got here is a quarterly chart of the Dow Jones with some channels drawn of key points. Short-term targets are circa for Q118 are around circa 22,800. Support lying around 20,763, and down here as well. Major support is down around circa 12,000. But where it gets interesting is when we have a look at, well, what are the targets in a couple of years? What are the targets by the time we get to 2021? Because the angle of the market is what drives the likely targets going forward. And so, what was a mid 20,000 target in Q118 is suddenly a circa 35,000 target by 2021 in the extreme. So the Dow does appear to be long-term bullish. The angle of the market is steeply up. It appears to be well supported currently, while the market remains on a quarterly close above 19,753. Some of the upside targets moving into the 2021-2022 period puts you into the 35,000 to 40,000 region, which might seem astonishing to some people, but if you do the maths and follow the geometry of time and price, that's what it is implying. So I hope all that helps, and please feel free to get involved with Sean and I at Trading Safely at www.tradingsafely.com.au. We do have a free trial. You can join our exclusive online Facebook private community site where we do detailed in-depth analysis 24/7. And I hope that helps.